Good morning. What's going on, guys? What's going on? Good morning, everyone. It's pretty much, I know it's holiday. Thanksgiving is going to be tomorrow. I know that most of you actually should potentially actually be sidelined today. Why do I say most you should be sidelined? Rather because of the fact that a lot of big money buyers, a lot of hedge funds are more so going to be sitting on the sideline. They are more so going to be spending time with their family going into this holiday. And of course, usually on short weeks, not just holidays particularly, we end up getting relatively low volume. That is pretty much what's going to be your biggest factor is fighting against low volume. And then also the fact of which we all do not want to get caught in as options traders is if the fact we end up getting a range bound day. That's going to be pretty much the bigger concern that we end up having in our hand. I believe most of us kind of expected to have a nice little gap up this morning. That was not particularly the case. I did come on live this morning and I mentioned to pretty much keep an eye on your three-headed monster. Keep an eye on Tesla, keep an eye on Apple, keep an eye on Microsoft, right? And that more so kind of gave you your leading indication yesterday. We saw Microsoft and Apple kind of dip a little bit into the red. They were pretty much were not able to necessarily stay in the red for much long. And once we got the euro close yesterday morning, that pretty much set us up for a beautiful trend day. As you see, what I actually have outlined right now is that little wedge, little pennant action, however you call it, same pretty much setup. But that's what we got. We had a nice little breakout, and we were able to get a nice little trend just going right into a little bit of a resistance here, close enough towards this 399 high. So a little bit of a pullback here pre-market. Do I expect it to be more so anything more significant? No, I do not. I would anticipate that if we get any kind of significant more downside than what we have pre-market, ideally I would say that we shouldn't bleed out going into the holiday tomorrow. But more so, I would look for support. 397.71 is what I'm looking at for support, and that is going to be where I should potentially look to see if it's going to end up being a dip buy opportunity, or if for whatever case maybe we do have a bloody day going into Thanksgiving. Then let's look below 397 point that 71 spot. And then I'm going to be looking down towards 391 is what I'm going to look at for our next level of support. So that's particularly the key levels. 390, 397.71 should hold. That should give us the reflexive bounce back to the upside, which I would be cautious if it creates a range bound day, or does it break us down below 397, and that could be a royal flush that we have on our hands today, and it could be rather bloody for our turkey day. All right. So that I would absolutely hate for everyone, but I'm a little bit more. I'm more in the camp that I would preferably like to see us retest that 397. That's ideally my game plan. Let's retest the 397.71. Give us a little bit more of a pullback here this morning out of the opening bell. Let the big money buyers pretty much pull out all their money from the market going into the holiday day, right? Into the holiday. And then let's pretty much see if the market's going to escalate to the downside, right? Or do we end up getting that bounce at that particular spot in which maybe I end up looking for that to be my one day trade for the day on low volume, particularly, and I end up buying the dip at 397.71. That would be pretty much golden to me. Give me that beautiful buying opportunity and then trap the bears to the downside. That would be my game plan here this morning. I'm not going to say that we end up even getting down that low because after we had a beautiful day yesterday, there's not necessarily anything negative that we should end up getting more continuation that we have pre-market off of this breakdown. But I would be looking for the breakout. I would look to confirm this breakout here over 401. We get the break over 401. I believe that's when we are going to be in business, and we should get a beautiful setup for continuation up towards up towards 4 or 5. All right. So that's basically my flip sides of where I'm looking at. I definitely do not want to get caught in a range day today on this low volume. That's pretty much a no go for me because with low volume, I'm definitely not going to be sitting here just getting my premiums chopped up. So hopefully that's pretty much a word of advice. Do not try to hold. Today's not one of those days to hold longer than you should. Do not do that to yourself. I'm gonna just tell you that you're likely gonna end up kicking yourself on Turkey Day if you end up holding longer than you should today. All right. By the way, just drop into that chat. Kaz, Steph, good morning. Alobo, what's going on, my guy? Turkey Day. I am ready. I'm kind of getting over the sickness here, so I'm ready to just stuff my face, whether I'm still sick tomorrow or not. I don't really care. I'm gonna just eat until I can't eat anymore. Actually, someone actually told me the key to actually not eating as much though is if you actually drink a lot before you start eating. So apparently someone told me if I drink a lot of beer, then I won't particularly eat that much. But then I feel like I'm gonna just feel like shit after the fact. So I don't know if that's good advice or not though. Renee, what's going on, my guy? Let's see. You saw COSM when it was 0.16 a penny stock. All right, let's see where your penny stock went. From 16 cents to where is it now? Oh crap, it actually doubled. All right, and it more than doubled actually pre-market. All right, that's a pretty nice little setup there. I like. You actually have a beautiful little gap fill. It went right through that gap fill. It said peace. So you are through the gap fill. Just looking historically right now, I would likely say your toughest resistance is going to be getting that wick fill up towards that 70 cent mark. So do I say it's a penny stock? I mean, obviously there's a lot of gambles in getting into a penny stock. That 70 cent mark is going to be tough to break over. If you can get a dip by entry, more so, I would more than likely say look to get that dip by entry right around that 43 cent mark. If you can get that 43 cent mark, about a 4 cent drop, then ideally you should end up getting a pretty beautiful entry off of that. So I would look for that to be your dip by entry at that 43 cent mark, and then ideally have a stop loss. I mean, of course, it's more volatile with pennies having a stop loss, but nonetheless, that would actually be where I would say probably a little more comfortable for you to get into. All right. So that's looking at that. Real quick, 1 second for me. Just pull something up real quick, guys. All right, there we go. Perfect. All right, so I was gonna look at our three-headed monsters. Now, I will say this is a hell of a gap up that we had off of Tesla out of nowhere. Now, given the fact that it's already been showing so much weakness here the past few days, going dating back towards basically Tuesday more so, um, the September 15th of last week. So we did get a nice little gap up. I'm gonna be looking particularly to see if we get this gap fill. That's what's more so gonna be on my radar here. So it may not particularly play out today, but I want to see if we can get that gap fill over that 176, 176.77. We should end up getting a gap fill. But what's more important is that I believe we can probably likely push up and wick towards 181 even on the completion of that gap fill. So I ideally like the risk reward from 176 waking up towards 181 here off of Tesla. I believe that's ideally the better risk reward. Particularly if I'm looking for the dip by entry, I would look for this to retest down towards 171 and we see if it holds or if that ends up just being a royal flush below 171 and ultimately there's not much holding us down below this 167 mark and that could be a new bear market low that we're flirting with. All right. So I'm not gonna particularly look to force it off of a dip buy. I would more so look to see if we get further momentum to build off of this. Do we see Tesla kind of carry the day? If we do have a beautiful trend day, a beautiful green day here for the markets ahead of the holiday, I would look to see if we can get that push over 176, and I will gladly play that $5 move to the upside up towards 181 today. So that's one that I do particularly like to see. I mean, it's already been dying so much. It's due for that reflexive bounce, that oversold bounce right now that we already got pre-market here. So I'm gonna look for that one. That's gonna be on my radar here. Looking at our other three-headed monster here out of this group is looking at Microsoft. Microsoft has been that name that's been showing that relative strength the past few days, more so. I'm gonna be looking at Microsoft to see if we can get this pop over 246.72 is what I'm gonna look at. So 246.72, we get that pop over that. Then we're gonna be looking for the gap fill to be completed up towards 249.82 is what I'm gonna watch for. All right. So call it 250 is where you're gonna get that gap fill. So over 246.72, you play that to 250, and then of course I do have continuation leading us up to my next resistance at 252.99. All right. So that's another one that's going to be on the radar. It's been showing relative strength the past few days, despite even when the market has been relatively red. So that is a positive sign. So look for that strong relative strength to continue out of Microsoft. And if we see Microsoft and Tesla continue to go, oh boy, I don't even think it's going to matter what Apple does for us today. Because I did look at Apple, it was a little bit red. And one of the things to distinguish about the fact that Apple is that you have a nice little wedge here, a nice little pennant action that's taking place on Apple's 1 hour. A beautiful little wedge just setting up there. You got close enough to that resistance. And of course, Apple just a little bit unfortunate the fact that yeah, it pulled you back pre-market before hitting that downtrend resistance. I'm gonna watch to see can we hold that 20 EMA here off of the hourly, which we're sitting at pre-market. But ideally, the support I would look for a potential buy the dip type of opportunity is gonna be down towards 148.67. So a little bit of an overshoot off of this little morning dump for Apple. Look for that dip buy at 148.67. We lose that, then I believe that we are considering the fact that we could have a breakdown below 147. You're likely flirting with a breakdown here on Apple, and we could see this trend down towards first PT would be 145.31, and any escalation to the downside, you're looking for 142.82. All right. So those are particularly the three big heavyweights that will likely either give you that idea of whether we have a breakdown or they're going to lead us to the upside. My indication is the fact that Microsoft and Tesla will likely do their part to hold up, but we're going to have to see how much damage if we get escalation on Apple to the downside. How much damage is that going to do? And who's going to end up compensating for that matter? Do we see Netflix? Do we see Meta? Do we see another name like Amazon pretty much? Do we see those names kind of pick up the slack for that damage that Apple may end up doing here today? As it's likely showing pretty much the most weakness out of those three mega cap tech names. All right. Lobo, you mentioned cost and EMPH. Let's take a look real quick. Let's see what's going on with them. Cost has been a hell of a monster. I'm not gonna lie. This stock is always a monster. Now you are seeing in a gap fill. So that was the last time that I looked at the stock was when we were actually approaching into this gap fill. I believe the last date I looked at it was probably right around Friday of last week. So you have a beautiful gap fill. I was looking for the continuation of the gap fill, but ideally the only reason I haven't looked at this more so since the beginning of the week is because I wanted more so of a pullback. I was looking more so for a retest. It does look like a little bit of a rising wedge type of action that's taking place. If I draw this out for you right now, it looks like a rising wedge type of action, and that's what had me a little bit skeptic about it. So I did feel like we were going to get this kind of rising wedge type of action here, and that was my concern. So ideally, you have a gap fill here below 529.47, you have a nice little gap fill there to the downside, but then you're also entering a gap to the upside. So which gap is going to end up being filled first, a Lobo, is pretty much the $1 million question. Now, obviously, broader market perspective, and I think I've been talking about the Dow basically showing relative strength. I would have presumed that we were going to get the straight push up, a strong gap up would have likely set this for continuation to the upside. But I'm more so on the camp where I believe we're going to at least test this gap fill to the downside before we get the continuation back up. That's particularly what I'm looking at here. Let me actually just zoom out, of course, whenever you're pretty much in doubt of basically what you're looking at, always zoom out. So that's pretty much just showing you that from a hindsight view. That's ideally what I'm going to look at. We're looking at the daily here. All the EMA, the crossovers look beautiful for continuation to the upside. Looking out towards the weekly is what I also wanted to look at. You already had 3 consecutive green weeks here so far as well. Your support is sitting right around that 526 mark is where your hard support is on Costco. Ideally, what would I say is that I would prefer to buy this off of support off of 526, and that'll likely also be in conjunction with that gap fill to the downside that I was just speaking about. So I would say 526. Look to see if that ends up being a little bit of a support buy that you can get into. I don't know if you're in it already, a Lobo. Look for that 526. If you get any kind of retracement, look to see how it reacts. And I would use that 526 for your entry. And of course, having a stop loss in place from that entry point. Otherwise, if you're looking for continuation, then you want to see this get a break cleanly over 534.76. Over 534.76, you get that continuation for that gap fill. That'll put you up toward that 537 mark. All right. So a beautiful name. I mean, it's relatively always been strong. You're just at a nice little tipping point in which you could also say this is a daily little leading diagonal rising wedge action that you're flirting with. But I think even those of you that pretty much have seen Avery in our dojo, in bear market rallies, rising wedges have not particularly been very favorable for their bear market action that they're known for. Right? I've seen a lot of rising wedges that have broken north during these bear market rallies, so it would not be a surprise that we just get straight up continuation. All right. A little out of the money, almost green. You should particularly be green right off of the morning here. Now, the fact that, of course, you're dealing with low volume on a holiday week, if it is this week expiration, the fact that you're almost green and you're likely should be green here pre market, I would hope, at the opening bell, my gut feeling would say take your money and just stay on the sideline, being the fact that it's low volume and it's a holiday week. That would be my gut feeling for you, Alobo. Just saying because of the fact that it's a holiday and the low volume, and I would not try to force the situation to happen with a lot of big money buyers being off the markets today. That would be my gut feeling for you. But ideally, if as you're holding right now, I would likely say that your floor should be down towards 526. That is ideally where I would say is your floor. So it depends how much you can stomach at the moment. All right. So that was pretty much cost. Let's take a look at your other ticker EMPH here. Let's see what's going on with this one. So last time I looked at EMPH, and it looks like I haven't even looked at this ticket since the last time that I believe you actually might have been the one that I looked at this last time for El Lobo. The last time we had a nice little head and shoulders action that played out, and it looks textbook from the last time, and I believe I drew this out on for our YouTube live, but that was post market when I was doing it. So a beautiful little head and shoulders action that played out. You did get a strong recovery. You were basically able to defend that gap fill here. That's sitting from basically that 229 low. So a beautiful reversal that's taken place so far. Now, what's going to come back into play? And that's basically going to be this old trendline resistance that we have that has basically been acting as your peaks. And as you notice, I believe the last time that I looked at it, as we were approaching into that resistance point, basically towards the head of this head and little micro head and shoulders that took place, I said be cautious about the fact that as you approach into that uptrend resistance, you are likely going to end up getting just a wick fish to the resistance and a quick fade. And you didn't even get close enough to the resistance, more so than I expected. I expected it to get at least towards that 330, 331 mark, towards that resistance. So I'm going to look to crack that high. Ideally, if you're holding a position, of course, watch to see if you end up getting a double top here. That would likely be my bigger concern for you. If you end up getting a double top at this 324, call it 325, that is where I would say be cautious. Now, the fact that it is right here pre-market, I would ideally say if you're looking for an entry point, watch this down towards 312 half. 312 half should end up being your support, and look to see if that could potentially be your buy the dip type of opportunity. All right. So either you buy it at 312 half for and go for far out expiration, and you look to swing it, or if you're already in it, you look to crack that high of the day, or you watch for a double tap to pretty much exit that position as safely as you can with minimal loss. All right, that's ideally pretty much the two ways that I would say to look for that. I mean, the fact that it's what an over $300 stock, the fact that it ran $20 does not surprise me. I'm not exactly too surprised by that. I think we've seen Tesla pretty much when it was in the high 300s. We've seen Tesla run about 15 plus a day, more so 10 to 15 plus a day. But the fact that energy was actually more so been more volatile the past few days, that's likely more so an impacting factor as well. But yeah, it's a $300 stock. I'm not surprised that it's moving $20 on average, and you're getting to a tipping point of where you are basically getting into higher highs here, more higher all-time highs that you're nearly pushing. So as you likely push into a new all-time high, I would just be more skeptic for the downfall because of course, you see in the last two respective times that it's hit its overall peaks, it's been a rather steep sell-off. So that's what I would be cautious about. So I would just be mindful of, making sure you secure your profits as you should and be early rather than late. All right. Other than that, let's see. I don't think there's too much else that's on my radar. And Lobo, you mentioned what was my Microsoft levels? Let's take a peek back at Microsoft. Microsoft, I actually mentioned yesterday, and I said that it looked pretty much like a textbook daily bull flag, and it has been showing that relative strength or since early last week. It's been showing that relative strength. Now, levels wise, I'm looking at levels that I pretty much just have here. I'm looking for 246.08. Look for that to crack this morning. And then off of the daily, you could potentially look to swing out towards targeting the 50-day EMA. Well, not the 50-day, the 100-day EMA up towards 250.06, which is also a gap fill off of the 4 hour. If I dial down, that gap fill towards 250 is also flirting with your daily 100-day EMA as well. So 250 is what I'm going to be watching for. Above the 250 mark, I have a hard resistance level, and this is pretty much my hard resistance. I don't anticipate it going higher, particularly than 252.99 is what I have as my upside target for Microsoft. That is ideally where I have it pretty much topping out. Now, if we break 252.99, the bigger picture that I have targeting is, of course, that gap fill. It's going to be testing this gap fill. That's going to be testing it at 254.62. Do I expect to test that gap fill? I do not believe so. I think we're going to need a broader market rally in which, I mean, if we've actually seen the rally that we've had already pretty much, I mean, it's been pretty monstrous. So I'm looking at the fact that we're more so at the end stage of this rally. I believe we're going to pretty much get a nice little push. Depends how strong, how much of a trend day, and that likely should put you up for Microsoft to get that strong move up towards 252.99. It's just going to be whether we get that by the end of this week or do we end up seeing that more so next week. So my gut feeling will be is that we see that next week, and that is more so what I'm going to look for and target is that 252.99. But the gap fill is pretty much undeniable that that should end up getting filled. If you're looking for support test first one is going to be 244.02, and next support test below that is 242.10. We crack below 242, I believe that likely is going to be more so the end of this overall relative strength that we've seen the past few days here. And that's where I would be cautious for the upside. All right. So that is pretty much more so everything that I've been looking at. I am pretty much gonna likely conclude here for the day, guys. Again, it's low volume. We already see my concern here this morning is that we've seen the Dow been showing relative strength here the past few days, and I've pretty much been iterating about that. But now we're actually seeing the Dow showing relative weakness here this morning pre-market. So I am cautious about that. I'm a little bit optimistic about the fact whether tech is actually going to give us a nice little rally here today or not, or do we end up getting a breakdown? That's what I'm a little bit concerned about. It might be a bloody turkey day for that matter, just because of the fact that if the Dow is going to continue to show weakness, I'm a little bit concerned with Apple already showing weakness here this morning as well. So look to see what Tesla and Microsoft does more so importantly. I think that's likely going to be your leading indication here, just looking at rotations more so within a sector. As I usually say, with Apple showing the relative weakness, look to see how Tesla and Microsoft respond here at the opening bell. If they show relative strength, they continue their push, or do they end up fading with Apple leading us to the downside? And that would be pretty traumatic, especially for those of you looking for the upside. All right. So I will leave you with that sentiment. Hopefully, you guys have a great Turkey Day. Gobble gobble, and I will see you guys later. Later, everyone.